Wall Street, a case of good news led to a downturn Wednesday in the markets. I'll explain that in a moment. First, the closing numbers. The Dow dropped more than 100 points, wiping out all the gains from the previous session. You can see there at 15,302. Now, the Nasdaq was down over 0.5%, and the S&P 500 down nearly 0.75%. So why the downturn? Well, there wasn't any major economic data to digest Wednesday, so investors started worrying about Tuesday's positive reports on home prices and consumer confidence. They're worried that an improving U.S. economy will mean that the Federal Reserve will cut back on its stimulus measures. We should also note that volume has been pretty thin with trading, so that contributes to the volatility as well.
Absolutely, but volatility certainly creeping back not just into the U.S. markets, but pretty much everywhere at the moment, certainly here in Asia. Now, there was also a negative forecast on China growth, which didn't help sentiment in the US either. Let's talk about that. Let's talk about the broader markets with Ron Hart. He's Managing Director of the Hart Group at Morgan Stanley. Ron, good to have you back on. Let's just begin with the US. Yesterday, you and I were talking about these, the improving US economic outlook on the back of the housing and the back of the retail sales or consumer confidence. Now it's turned around. They're getting worried that those good numbers are going to affect the Fed's decisions. Should people be worried about this?
Well, there's a constant battle between rising interest rates and a slow economy. A slow economy causes rates to go down. When rates rise, traditionally the markets do not do as well. But you should see a nice rotation probably out of bonds into stocks because people like growth, and growth is the only place to go. Is the stock market if you want that. So you should see a rotation not only between sectors, but also back in the stock market to some degree going forward.
So what you're saying is that there could be inflation on the horizon, which is going to make bonds less attractive, so people will be looking for a new investment. When would you expect to see that rotation begin? Well,
the Fed has said pretty clearly at 6.5% unemployment rate, they're going to start raising interest rates. We're not there yet. We're 1% away from that. They also say if they see any form of deflation that they'll do that as well. So it may be a way off, but the market has a way to anticipate future problems, and they don't want to be behind the ball when it happens. So maybe it's anticipatory. Maybe the economy is percolating, and maybe things are better than people think in the economy. There's more demand for money. Rates will go up, and the Fed's just waiting to back away. It doesn't mean when the Fed is hitting the accelerator and when they stop, they don't hit the brake necessarily. There's a lot of ranges between hitting the accelerator and hitting the brake and ending QE3. So they'll ease off the taper, and that should be the way they'll do it.
What do you think the impact is of China on the US market and US sentiment these days? We had the downgrade from the IMF, not a big downgrade, down from 8% growth this year to 7.75% growth. That's not big, but the trend, not only from the IMF, but a lot of independent banks are all saying growth is weakening in China. What's the impact where you are?
They've grown 10% for 10 years. Trees don't grow the sky. You can't do it forever. So it's not unusual for them to be backing off a little bit of their growth expectation. The notion there, China, for their 10-year plan, wanted to double their economy. You got to grow at 7.2% to double your economy in 10 years. They're on path to do that. A lot of people say it's China's world. We just live in it. They're very big. They're the second largest economy right now. They'll probably be the largest economy in a few years. They're growing like crazy. The world watches them, and it's very important to keep an eye on what they do.
So you're saying you're still bullish on China?
In general, we like the growth prospects of China. We like global gorillas mostly. We like U.S. companies that have international presence in growing economies, and China's one of them. They also have presence in Australia and Chile, and we like particularly Mexico and India.
Okay. All right, Ron. As always, thanks for talking to us.
Appreciate it.